Dear shareholders, welcome to the 36th Annual General Meeting of Jindal SAW Limited. I now request Mr. P.R. Jindal, the Chairman of the company, to start the proceedings of the meetings. Over to you, sir.
Thank you. I welcome all my colleagues, shareholders, auditors, and ladies and gentlemen to this 36th Annual General Meeting of your company. This meeting is being held through video conferencing in full conformity with the protocol of COVID-19 and to ensure wider participation of shareholders as organization with resilience even in the difficult time. Now I request Mr. Neeraj Kumar, Group CEO and Whole-Time Director and Member of Audit and Stakeholders Relationship Committee, to introduce the directors of your company who are present at this meeting. Over to Neeraj.
Thank you, Chairman Sir, and good afternoon to all my stakeholders, shareholders. It is my pleasure to welcome the entire Board of Directors to this annual general meeting. This is the first one that we are holding it on a virtual platform. I must acknowledge and thank each of our directors for their active participation and the contribution that they have been making to this company through the board meetings, various other committee meetings, and other interventions that we have been receiving from them time to time. So let me introduce now the board of directors to all of you. We all know Mr. P.R. Jindal, our Honorable Chairman. We always feel that his intuitive guidance has always been a great guiding force for all of us to take this organization to where we are. And I'm absolutely certain going forward, we would continue to get his guidance and blessings. Next, Sminu Jindal, Managing Director for Jindal SAW for long. She has a bachelor's degree from Sri Ram College of Commerce, Delhi University, and she has also fortified herself with a management degree. Sminuji has a passion for, she's leading SWAM, an initiative which is changing the life of the people who are differently abled. Her recognition has been worldwide. Even the President of India has recognized her efforts. Sminuji, welcome. Next, it's my pleasure to introduce Shraddha Jetia. She is from Bombay. She is the second daughter of PRG. She is very much entrenched in cultural activities. I'm told that she also has a passion for dance. She choreographs, and she is very much involved in a very passionate manner in providing the cultural aspect to the cultural flavor to the board. Shraddha ji, welcome to the board and welcome to the AGM. Next, Mr. Hawa Singh Chaudhary. Mr. Hawa Singh Chaudhary has been with us. In fact, he would be among the oldest few members of Jindal SAW family. His major contribution has been setting up all the units that we have set up. Mr. Chaudhary has a very strong contribution. His expertise is project management. So he loves putting up plants and he continues to help us. Chaudhary Saab, namaskar and welcome to the AG. Next, we have Dr. Raj Kamal Agarwal. He is the chairman of the audit committee as well. He is one of the noted medical professionals working with one of the leading hospitals in Delhi. Dr. Agarwal brings a lot of experience in terms of the medical field. Also, he has now a lot of management experiences because of the varied interest that he has. Dr. Agarwal contribution during COVID in trying to set up a protocol, in trying to help all of us has been very commendable. So, Dr. Agarwal, welcome to the annual general meeting. Next, we have Mr. Ravindra Likha. He is an industrialist. The entire board of directors always love to hear his innovative thoughts. He has been guiding us for long. So, Mr. Likha, welcome to the shareholders meeting. Next, we have Mr. Abraham Tahil. He is an industrialist in his own right. He heads a listed company and very much involved in the iron and steel industry with various contributions. Mr. Tahil, welcome to the annual general meeting. Then we have Mr. Hazarika, an independent director. He is a career technocrat and he was selected by the Public Enterprise Selection Board as director for ONGC, and he has the distinction of being one of the youngest person to adorn the board of ONGC. His contribution has been very active, especially on health, safety. Because of his offshore experience, Mr. Hazarika has always been emphasizing the health safety aspects for the entire organization. Mr. Hazarika, welcome to the annual general meeting. Next, we have Mr. Sanjeev Shankar. He is a lawyer, solicitor by training. By profession, he is a senior bureaucrat. Now, Mr. Sanjeev Shankar has turned a new page in his life. He has become a philanthropist, and especially for cancer patients, his work is commendable of what he is doing. In many ways, it is unique. So, Mr. Sanjeev ji, namaskar and welcome to the annual general meeting. Last but not the least, Dr. Vinita Jha. She has a unique blend of medicine as well as HR. She guides us through most of our HR related committees and brings in the varied expertise that she has, because she again is associated with a very large conglomerate in the medical fraternity. She is also a lady member of the board, independent director, lady member of the board. Her contribution to the board is always very lively and HR oriented. So, Dr. Jha, welcome to the annual general meeting. With these, I have completed my introduction to all the board members. We also have our head commercial, and which is Narendra Mantri, and Mr. Vinay Gupta, who is our treasurer. He is available to assist us through the process. So with these, this is the senior management board and the KMPs who are there for Jindal SAW today present in the annual general meeting. Thank you, Chairman, sir, for this opportunity to get everybody introduced. May I request now Sunil Jain to carry forward the proceedings. Sunil, would you please confirm that we have the quorum of the meeting?
Thank you, sir. Good afternoon, ladies and gentlemen. The necessary quorum for the meeting is present. Therefore, with the permission of Honorable Chairman, the meeting is called to order.
Proceed.
Thank you, Sunil. We also wish to confirm to all the stakeholders, shareholders, Dr. Rajkamal Agarwal, in the capacity of the chairman of the audit committee, is also present as is required by the company law. So, Dr. Rajkamal Agarwal, thank you very much. Would you like to say hello to the shareholders?
You are on the mute, Dr. Saab.
I am still on mute.
No, now it's
Now
okay.
you,
No, I am not. I welcome all the shareholders to our annual general meeting, and we pray for their prosperity and health. And I think in this pandemic, they will take care of health by following government's regulations. Thank you very much.
Thank you, sir. May I request now our chairman, honorable chairman, Mr. Jindal, to take the stage and take care of the chairman's message.
thank you. May I request Srinu Jindal, the managing director of the company, to convey the chairman's message, please.
Thank you so much, Papa. I tell the chairman's message on his behalf. With immense satisfaction, I'm happy to share with you all that Jindal SAW Limited has dealt with the second wave of the COVID-19 pandemic with resilience and emerged stronger. All our units have been operational through this period with minimal disruptions, and we have kept the business wheels in motion while dealing with the health crisis that has been more than severe than the first wave last year. The business continuity plan and the other initiatives rolled out during the first wave came handy and prepared us better to deal with the second wave. We improved our response system by setting up oxygen plants at 3 of our main facilities in 3 states of India. This initiative helped us to provide a sustainable supply of oxygen to the hospitals and communities in the vicinity of our units during their time of need. We have also undertaken mass vaccination drives to vaccinate our entire workforce along with their families across the country to keep them safe and healthy. During the second wave, the government allowed economic activities to continue with partial lockdowns set by respective states. This slowed down our momentum and would definitely impact the performance of the first quarter of the financial year 2021-22, albeit to a lesser extent. Looking at this last quarter's performance for the financial year 2021, we feel confident that our company has grown from strength to strength and has emerged stronger from the first wave of the pandemic. That quarter's performance was one of the best ever. This is a firm indicator of the company being at a point of inflection, ready to demonstrate improved performance as soon as we are able to get a firm grasp on our situation during the pandemic. The government continues to remain focused on the Atmanirbhar Bharat initiative and its emphasis on investment in infrastructure and development. This provides a boost to the overall demand of basic commodities, and with the interest rates kept within a reasonable band, would also provide liquidity in the system to keep the Indian economy progressing further. The Jal Jeevan mission has also gained momentum, where now most of the states and the union territories have also have planned their water grid systems and are in the process of rolling out the pipe network across the states to ensure water supply in homes within a defined timeline. These initiatives of the government make us hopeful of a robust and steady demand of our products once the economy opens up and the pandemic shows a decline. The effort to vaccinate most of India over the next 6 months would also help in containing the future waves of COVID-19. We have been gearing ourselves to consolidate and further our leadership position with all-round emphasis on our businesses. We intend to merge our stainless business, DI fitting business, and other 8 SAW units with the company's Jindal SAW Limited for a unified structure with better synergies. Our partnership with Hunting is becoming stronger, and we are working together to develop a more diverse product range at one of our units. These initiatives would help improve product development, leading to better and deeper market penetration and diversification as we emerge as a frontline product and service provider to our esteemed clients across the globe. We emphasize diversifying our product range, deepening our value-added capabilities, preparing to enter high-value markets while remaining focused on our core competencies. Other areas of focus are a balanced capital structure, building on relationships with investors and other stakeholders, and maintaining our good governance practices. Swayam, the company's CSR initiative, continues to focus on the development and upliftment of an important section of the society, which is differently abled and needs support to lead normal and comfortable lives. Our human resources, which have been one of the most valuable assets that we always maintained and cherished, and deserve a special mention and acknowledgement. During the stressful period of the COVID-19 pandemic, they have kept the motivation level high for themselves, their family, and people around them. Each one of them has demonstrated an exemplary resilience and stayed focused on the purpose at hand. I applaud the courage and performance of all my colleagues at all levels during these difficult times. We would like to express our gratitude to all the government authorities at the central, state, and local levels, other stakeholders, business partners, clients, vendors, banks, and financial institutions, rating agencies, and all associated with us for their continued support even during the difficult times. We are confident of our preparedness to emerge stronger and integrate better with the markets in India and abroad to remain a market leader as and when the country and the world bounces back and the economy gets back on track. Jai Hind.
Thank you, Swayam. Thank you.
Thank you, Chairman sir. Thank you, Sminuji. I'm sure the shareholders would have got the message on what the core values are for our organization and how we are going to move forward. May I request now Sunil Jain, our company secretary, to take the proceedings further.
Thank you, sir. I will elaborate on the procedural aspect of this meeting. The certificate by statutory auditors of the company on the employees benefit scheme approved by the members under SEBI, Share-Based Employees Benefit Regulations 2014, and the Register of Directors and Key Managerial Personnel and their shareholdings, and the Register of Contracts maintained under the Companies Act 2013 are available. These will remain accessible for inspection by the members of the company electronically if they so desire. The notice of the meeting and the annual report for the year 2020-21, along with the auditor's report and the reports of board, having already been circulated to all of the shareholders of the company, are being taken as read with your permission. Now, I would like to inform that as per the Companies Act 2013 and the SEBI Listing Obligations and Disclosure Requirements Regulations 2015, which provide for electronic voting, the company had provided to its member the facility to cast their votes through remote e-voting provided by National Securities Depository Limited. The remote e-voting period was open from 9 a.m. on Tuesday, the 13th July 2021 to 5 p.m. on Thursday, 15th July 2021. The members who could not cast their votes through remote e-voting, the facility for voting at the meeting is also available to the members present in the meeting. The members, while participating in the proceedings of the meeting, may cast their vote on NSDL e-voting website by using the login method detailed in the AGM notice. The facility of voting is open and shall remain available for 15 minutes after the conclusion of this meeting. Mr. Avnish Kumar Dwivedi, the practicing company secretary of Messrs. Dwivedi and Associate Company Secretaries, New Delhi, has been appointed as a scrutinizer by the Board of Directors to scrutinize the votes cast at this meeting and through remote e-voting in a fair and transparent manner. Since this annual general meeting is being held through video conferencing and other audio-visual means, the resolutions mentioned in the notice convening the AGM have already been put to vote through remote e-voting. There will be no proposing and seconding of the resolutions. There are 11 resolutions seeking your approval as contained in the notice of this AGM. I will briefly inform about these resolutions. Item number 1 is adoption of audited standalone and consolidated financial statements of the company and the report of directors and auditors. Item number 2 is declaration of dividend of rupees 2 per equity share of rupees 2 each as recommended by the board. Now, item number 3 is reappointment of Ms. Simnu Jindal as director liable to retire by rotation. Item number 4 is reappointment of Mr. Neeraj Kumar as a director to retire by rotation. Item number 5 as a special resolution, reappointment of Ms. Simnu Jindal as managing director of the company. Item number 6 as a special resolution regarding reappointment of Sri H.S. Chaudhary, whole-time director of the company. Item number 7 as a special resolution regarding reappointment of Sri A.K. Hajarika as independent director of the company for his second term. Item number 8 is ratification of remuneration payable to cost auditors, Messrs. R.J. Goel and Company, cost accountants for the financial year 2021-22. Item number 9 as a special resolution, approval for payment of commission to non-executive directors for the period of 5 years. Item number 10 as a special resolution, approval for raising of debentures on private placement basis as and when required. Item number 11 as a special resolution, approval of issuing securities to qualified institutional buyers as and when required. Now, I request Mr. Neeraj Kumar, Group CEO and whole-time director, to give presentation on the working of the company to you. For the information of shareholders, after presentation by Mr. Neeraj Kumar, there will be a question-answer sessions for the shareholders. Shri Neeraj Kumar.
Thanks, Sunil. Yeah, Stanford next. Good afternoon, shareholders, once again. Stanford, please go to the next slide. Yeah. This is something that we have all been very diligently working with to build on the fundamental strength for Jindal SAW Limited, which has kept us in very good stead during these difficult times. Our diversified product range, manufacturing excellence, extensive geographical reach, clientele, which we really made us proud all over the world, the experienced management personnel, and very strong backing of the group. All these are unique hallmarks which make Jindal SAW unique as a market leader in terms of pipe manufacturing across the globe. In fact, many of you may know that in terms of the product range, probably Jindal SAW is the most diversified. Now we even have HDPE pipes within our fold. We have entered stainless business in a very big way. We manufacture seamless tubes, carbon steel, alloy steel. We do DI, ductile iron pipe, and we also do LSAW and HSAW, which are large diameter pipes made out of iron and steel. So with this diversified portfolio, we have a global reach we reach to different business segments, different industries, and therefore our business model is very, very low. Based on this year, on a standalone basis, we had a turnover of 8,900 crores, an EBITDA of 1,257 crores, with a profit of 329 crores. This was in a year which was the first quarter was almost very, very difficult for all of us because of the national lockdown. Slowly, the business started picking up, but still we could do reasonably well as compared to many others in the industry. Next, please. How we dealt with the pandemic situation, because that's again where we made a lot of emphasis. The message from the chairman was very clear. First, preserve life. Then conserve your resources, be ready and get your organization or operations back, following all protocols, following all approvals in place. So that was the message, and that was then percolated down throughout the Jindal SAW organization, where we set up very strict protocols. Every guest house, every school that we had within our premises were kind of converted into quarantine centers. We did not venture into putting up ventilators, but for that we were fully prepared. Then people were accommodated within the plant premises to the extent possible, so that we are able to create a security bubble and we could be ready to start operations the moment the lockdown ended. We have also been very active in trying to improve or assist our locality which is around the plants, where we have set up now 3 oxygen plants. We have donated many COVID related equipments and many things to the vicinity, so that we are not able to just keep our people safe, but the community around which we have our plants, we have contributed to keep them all safe, healthy, and bring them to prosperity as soon as the impact of pandemic was reduced. Next, please. These are now the 5 core principles that we have embedded in our system. We call it Atmanirbhar JSAW. There is a lot of emphasis in improving the productivity, improving the product range, improving things within the system, so that we make Jindal SAW self-sufficient. Lot of emphasis on automation so that we can reduce the manpower, and again the reliance on during this pandemic. Nutan is a third initiative that we have, where we are entering new product range which are more value added. Vayudoot is something that we are able to create a electronic platform for the end-to-end logistic management, and Mrigya is where they are looking for opportunities in terms of mergers and acquisition. We want to cherry pick certain assets which really give synergy and which will help Jindal SAW take the inorganic growth route for the next step as and when the market opens. Next. Shareholders, now this is something which is important for us to see how the quarterly performance for the last year has been. Just look at the last of the last year. We have bounced back. The first quarter, when we were facing the national lockdown, we could still keep our head above the water. The last quarter, where we have bounced back very strongly, probably one of the best quarters that we had in the recent years, both in terms of top line as well as EBITDA. Another very important aspect is now, if you look at the consolidated results, is also now showing a very positive trend with respect to the subsidiaries contributing positively, especially our Abu Dhabi facility, DI facility, has started contributing very positively. Last year, we crossed 2 lakh tons of dispatch, which was a record, all-time record for DI facility in Abu Dhabi. US, the facility is very good, it's completely ready. But that during this pandemic and the change of government, plus coupled with oil and gas prices, the prices of oil really going to a very, very low levels. The US subsidiary performance did get impacted because of the environmental situations, but now we are bouncing back there as well. So if you really look at the quarterly performance, it clearly shows the trend, and it gives all of us the confidence that as an organization, we are absolutely ready and willing to perform the moment the environment and the market allows us to do so. Next, please. These are a 5-year view of our financial trends. Again, it is beginning to show a growth, but for the impact of pandemic. And that is what we are very confident that we would be able to bounce back, because as an organization, the systems are in place, the management is in place, all the new technology innovations, they are all in place. So we will bounce back the moment we get an opportunity. So this is a standalone. A similar trend is visible on the consolidated as well. Next, please. So if you see an absolutely similar trend on the consolidated results as well, because of strong performance from Abu Dhabi, US continuing to do well now with the opening up of the markets and the oil prices coming to some reasonable levels. Next, please. This is a very important slide for the shareholders. Please see, because of the robust business model that we have, the net worth of the company is on the ascending, as well as the net debt of the organization is descending, and it is descending very, very definitely. This is a deliberate attempt by our organization to bring the debt under control as we continue to build on our net. Next, please. Exactly a similar trend on the consolidated basis. Net worth continue to increase now, debt coming under control. So this is a philosophy that now we are willing to, or we are beginning to follow in Jindal SAW and maintain very strong governance principles around it. Next, please. Going forward, some of the important initiatives. Our relationship with Hunting is beginning to deepen. In the last few years, we have done a lot of ONGC orders. In fact, this is one of the major drivers for our Atmanirbhar JSAW, which is aligned to Atmanirbhar Bharat, where we are getting a lot of, or we have executed a lot of developmental orders from organizations like Oil India and ONGC, where we are now beginning to address the exotic or the value-added sectors, which so far has been addressed by the imports. So this relationship is now beginning to get deeper. We are exploring ways on how to collaborate bigger, better, and convert one of our units as the excellence or manufacturing excellence unit, which will then be at par with the units which are there all across the globe. Next. These are some of the challenges that we are preparing to deal with, because in the short term, till the time the pandemic is there, we have to face intermittent stoppages of work. That's where our automation drive, that's where our other initiatives, logistic platform on electronic, should keep us in good stead. Supply chain disruptions are also something which happens whenever there is any lockdown or any severe pandemic in any state. We have a disruption of supply chain management, so we are preparing to deal with that as well. Paucity of labor, because in what we have seen in the first wave, in second wave as well, the migrant laborers tend to go back to their hometown and then their return is delayed. So these are being addressed by those 5 core principles that I talked to you earlier. Then we have one thing that we have to now deal with, and we are dealing with, is the prime raw material, which is steel, iron and steel, has shown a certain spike in the last few months. But now we have been able to get our arms around it in terms of using our long-term purchase strategy to get the raw material price under control and also pass on the increase in raw materials to our clients so that our EBITDA margin remains protected. So it has come under control, but it did impact us in the last few months. The business momentum gets broken whenever you have a disruption because of a situation like pandemic. So we are trying to again deal with these by conserving our resources and kind of curtailing ourselves, bringing down all the fixed expenses to the extent that we can so that the impact of this can be minimized. Finally, I am very happy to let you know that Government of India, Reserve Bank, all the banks have announced certain reliefs, moratorium, etc. As Jindal saw, since the pandemic was new during the first wave, we did avail of the first moratorium, but we returned that to the bank, and after that we have not been availing any of the moratorium or the concessions being announced by Reserve Bank of India or banks, because during this period we have been able to build a very robust, strong financial capability in terms of our resources, and therefore as an organization we have not to resort any of those concessions which the RBI and government has been announcing from time to time. In fact, the first moratorium we availed, we in fact returned back to normal, we refunded whatever it was there, and we feel confident that as an organization we have enough financial muscle and resources to deal with such situations coming forward as we continue to be on a point of inflection to perform the moment the environment and the market allows us. Next. Shareholder continue to be our focus. We have been always a bit concerned that the effort that is going in, the value creation that is happening within the organization is not, or there is a lag where the shareholders are really able to see this value. Therefore, during this pandemic, even though the financial performance was a little stressed, we continue to maintain the dividend level as last year, 100%. We continue to focus on this, and now we are happy to see that the gap between our market cap versus net worth is beginning to close. Earlier, the gap was much wider, but it's refreshing to see that now the shareholders, the stakeholders are beginning to see the value creation and the efforts of the organization to really build a very, very strong, resilient market leader on a global scale. Next. The drivers of growth. We are seeing the Jal Jeevan mission in India, also the emphasis on oil and gas. These are some of the prime drivers for our product range, and in the next 3 to 5 years, it gives us a lot of hope that we would have a lot of business where the organization can grow based on the tailwind that we will get from these important missions and initiatives of the Government of India. Next. Thank you very much. So with this, let me stop here. That was a structured presentation. I hope all our shareholders have got a glimpse of what we are doing, what as an organization we have come up with. I would be able to take some questions. So I would request now shareholders, if you have any clarifications, questions, please go ahead. Stanford, would you please moderate the questions?
Sure, thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. We take our first speaker shareholder, Sridhar Hegde. You may go ahead, please. Mr. Hegde, may we request you to unmute your audio from your side and proceed?
Good afternoon, sir. My question is, what is the impact of raw material prices on execution and future demand, and how the company is insulating its business model?
Thank you, Sridhar, for your question. As we addressed, whenever there is a spike in the raw material prices, it has immediate impact in terms of some of the projects get delayed, because then the EPC contractors and the others, they would like to have a wait and watch policy. So the supply gets temporarily impacted. The margins get temporarily impacted, but we try and hedge that position by having long-term contracts for supply of raw material. So even though our typical raw material, which is iron and steel, they operate on a spot market, we tend to open letter of credit so that we are able to protect our price with deferred delivery. That helps us to a very large extent mitigate this risk, and it gives us time to pass on the increase in raw material to the customers. This is a cyclical phenomena. It happens periodically wherever the cycle changes, but it does not impact the long-term outlook or the long-term demand, because if you see the demand for water, the demand for oil and gas, and hence the demand for pipes, that's kind of inelastic demand because of the nature of country. We are still a developing country. There is a lot of scope for infrastructure. So long-term demand doesn't get impacted. We do get impacted in short windows where we have a hedging strategy for our raw material, and we also pass on the increase to the customers, which we are able to successfully do so. Thank you.
Thank you. We have our next shareholder, Shailesh Chavan. You may go ahead, please.
Good afternoon, sir. Thanks for the presentation, sir. Sir, my question is that how is the economic scenario for the water segment sector and domestic oil and gas segment, and what is the visibility of demand in these segments?
Thanks, Shailesh. As I mentioned now, the Jal Jeevan Mission, the kind of momentum that it has gathered, it's a initiative which initially Government of India has taken, but now most of the states have also gathered, and it has got a momentum to the extent that all major states, be it some of the BJP ruled states like UP, or even Congress ruled states like Rajasthan, they all have now developed their own water grid system. So this Jal Jeevan Mission is giving a very clear visibility of a lot of demand for pipes in all states for different sizes. That is where an organization like ours, which manufacture large diameter pipes which can be used for transmission, DI pipes which is used for distribution, as well as HDPE pipes which is used for the last mile connectivity. We see a very good future backed by this Jal Jeevan mission, which is now gathering a lot of momentum in all different states across the country. Oil and gas, the moment you see is the oil and gas activity or building of oil and gas infrastructure is linked to the oil prices. When the oil prices tend to drop below a certain benchmark, then these projects tend to get delayed. Hopefully now the oil prices which have come back, we are hoping that it will stay there for next few years, and therefore this oil and gas infrastructure would also be built. And therefore we are hopeful that the pipes that go there for the transportation of oil and gas should be there. So all in all, at this point of time, we are very confident about the demand, we are very confident about the economy, we are very confident about our capability. The only issue that we have is the pandemic. The disruptions that pandemic is able to cause are the short-term issues that we have to deal with. Otherwise, on the next 3 to 5 years, we see a very, very confident, we are confident about good demand backed up by good performance. Thank you.
Thank you. We take our next shareholder, Rajiv Chaturvedi. You may go ahead, please.
Good afternoon, sir. My question is, what is the management view of lower return of capital employed and return of equity, and how management is addressing lower return of capital employed issue, and which are the new higher returns of capital employed segments we are focusing on?
Thanks, Rajiv. If you look at our ROC, which is capital employed and return on equity, please look at it in two segments. On the operational side, if you just look at our operating income in the last few years, then on both parameters, there is an improvement. But since the organization, since the balance sheet has some legacy issues in terms of, if you look at the non-current assets, which are being addressed, but because of the pandemic, there is a little disruption there. It's taking a little time. So what we are confident is the moment the pandemic comes, we are able to monetize some of the non-core assets, which are very much in the pipeline. Those capital, once it flows, would further bring down our debt, etc., which will tend to improve. So operating wise, definitely there is an improvement on capital employed and equity. Once these legacy issues of the balance sheet get addressed, which will get addressed for sure because things are in pipeline, you would see that there would be a quantum jump in the return on capital employed and return on. So it's a matter of time.
So shall we take the next? Thank you.
Yeah, please.
The next shareholder is Saket Kapoor. You may go ahead, please.
Yeah. Am I audible, sir?
Yeah.
Hello?
Yes,
you can hear me, sir?
Yes,
sir.
Saket.
Good afternoon,
Good
sir.
afternoon.
Good afternoon, sir. And nice to see you, sir, and a good presentation. And this is the first virtual AGM being conducted by, so congratulations to the team for work. Sir, I have a couple of questions, so bear with me, sir. Sir, firstly, as you have articulated that we are looking into diversifying our product range, and especially you have mentioned about this hunting part of the story being played out in the niche segment going forward. So, what kind of opportunity are we looking forward, especially from this hunting part, and out of the total sales portfolio, how much is going to be value added, sir? And how is the margin profile different with the traditional and the value added segment? If you could dwell, what kind of work are we looking there? And sir, in the chairman's message, the phrase of point of inflection has been mentioned. So we investors would like to understand what is being conveyed by point of inflection, sir. Over a period of last 3-4 years, barring this pandemic part, our utilization levels have remained about 50% if you take the nameplate capacity. As per the annual report, 2 million ton is our combined capacity. And we have been selling pipes to the tune of a million to 1.1 million, if I'm not wrong. So, looking at the visibility and the business opportunity going forward, what are we looking ahead in terms of utilization levels? I know that the product mix part plays a lot into it, but still, if you could give an understanding from 1.1 million, where are we heading? To, say 1, 2 years, 3 years down the line, and since in the last quarter itself, you have told that due to pandemic and the inflationary trends in the steel market, the order booking was also on the lower side. So a better understanding on that. So would you like to answer these 2 points, and then, or shall I continue with my questions, sir? And you will be answering it as a whole. I have a couple of 3, 4 more questions to be asked.
Sanket, please go ahead. Sanket, please go
I
ahead.
will
I'm
continue.
taking note of it.
Yes, sir. Please, yes, sir. Sir, now I come to this pellet part also, sir. The pellet unit has been a blessing in disguise for us, sir, over a period of time, and especially with steel prices, iron ore prices moving northward. We have this segment has supported a lot to the bottom line. So over the last 3 years, if you could give an understanding, what have been the realization for us since the volume has remained more or less same? How much has pellet contributed to the top line and the bottom line? And what is the update on the environment clearance which we are seeking from the government regarding ramping up the capacity at the pellet one also? Sir, I come to the subsidiary performance. I congratulate the team, sir, on the turnaround in the subsidiary performance, barring the hiccups against which we faced with the Italy subsidiary last year, wherein we took a write-off. What are we looking ahead, sir, in terms of this restructuring story, sir, which you have mentioned, and a committee being formed? Although you have spoken about it in the last con call, but still we would like to hear, sir, what is the thought process going ahead with the subsidiaries, and even the ITF, the major subsidiaries, which is where is the court case is pending. Any further update over that? Sir, we find that our is a unique pipe solution company, which has been very well understood, but it is also a unique company in terms of market capitalization, or because it is the one of the biggest player, and it is commanding the one of the lowest market capitalization. We are trading below book value for a longer period of time. So my question to this time from to the honorable chairman who is addressing us this time, his question is to him, if I permit so. What is the value creation idea he want to convey to us as investors? Since you are a professional person, but he is the promoter, and the majority stake is under them. So what is the thought process in unlocking value? I just give a very small example and then come to my last two questions. 2011, 15 July, the stock traded at a price of 142 rupees. Same face value, same equity based capital. Today we are in 16 July 2021. The stock trades at 130 rupees. So you can understand what kind of dynamic value creation has happened for investors community. We have gone through various phases, but that's a very small point that will make understand what I'm trying to say. Coming to the debt part, sir, you have mentioned that we have been lowering debt, but still, sir, the institutional debt is on the higher side. What is our thought process for a 2, 4, 5 years plan? Where are we going to be in terms of the debt profile which we have? And we had to take some NCD also from LIC last time. So are we facing any liquidity issue for which we have gone for it, or in anything on that annual for the debt part? We are definitely concerned about our debt profile. And going forward, sir, as you are speaking that we are going into new trajectory altogether, how are we going to reward our shareholders? How are we going to utilize our cash? What is the thought process behind it going forward? So that would give us a fair idea of how things are going to be. And lastly, sir, on the Jal Se Nal scheme and the government part of the story. So we also find that the government finances are also stretched. So and the steel prices and the pipe prices have moved up substantially over a period of time. From the last year, I think so 30% the prices have moved up. I'm talking about the DI pipes. And we are having an order book of $457 million as per the last quarter. So what portion, how are we cushioned against these cost escalations, and are we going to take any losses on account of this order booking done by us when the prices were lower, or any total back-to-back arrangement has been done with respect to the raw material part? If that could be dealt into, that would be very fine. And lastly, the US subsidiary part also, sir. We have been hearing some part of play from some exporters were telling, there was some news that there are some penalties being levied on our subsidiary, or they are in the annual because of some order getting cancelled, or our order being submitted. We may be facing some penalty of 150 to 200 crore. So anything in that in the annual, or we are contesting on that front? I hope, sir, that things, my questions would be addressed to the utmost, and I know you will take care of the same. But Mr. Jindal, we investors are looking forward to really having an understanding from you also. At what is the message to us as investors who have been invested in the company and believe in your hope story, if I may use that phrase bluntly here, because that has been the case. And if you compare yourself with all your peers, they are sitting on cash, they are expanding with their cash, and we are sitting on debt and only servicing and paying the banks with the finance cost. So that shows the stark difference. In our company, there is no institutional holding. There are no mutual funds. In them, the mutual funds are holding anywhere between 5 to 15%. So that shows we trade at below book value. They are trading above 4 to 5 times the book value. So just try to unwind us. Where are we going wrong, sir? Why is this such a stark difference, being the largest player commanding lower valuation and the smaller players commanding higher valuation? Look into our aspects, sir. Dwell into it, and God blessing, things should be looking up. That's all from my side, and thank you for that patient hearing, sir. Thank you, Jindal Saab and Neeraj ji.
Thank you, Saket. Thank you very much. Neeraj, would you please answer all the queries Mr. Saket Kapoor has asked?
Yes, definitely. So, Saket, first of all, I have to thank you. It only shows that you are a very keen follower and a very avid analyzer of business. The kind of questions that you have asked, it covers all aspects. And I'm not sure now, have you left any question for the shareholders who are going to follow you? So thank you for taking that kind of interest. Let me just tell you, please, you have to keep a little bit of patience, because there are some legacy issues that we are dealing with, and we are continuing to deal with it very systematically, very transparently, and the value of the organization will definitely get preserved. Now, with that, let me give you specific answers to your questions. Diversification is a constant endeavor within our organization. Hunting partnership will give us, and it will make us the only organization in India which would be able to enter the premium segment in the OCTG market by way of premium connections. Now, Hunting, as you would know, are only among the top few companies in the world with a very strong partnership which is deepening, would give us access to those segments. It would also give us access to some value-added segments like 13 chrome and corrosion resistance products, where we would be able to sit in the front line with the international players. It would give us deeper market, much higher margin, and also would be able to charge a premium, because of these properties are all patented and protected. So that should give you a sense of that the kind of diversification that we would achieve by Hunting. In chairman message, there is a point of inflection, because as we talked about stainless business, carbon alloy, seamless tube business, this would give us again a unique position. There are competitors who address one or the other segments, we would be the only one who would have a comprehensive product range of carbon steel, alloy steel, stainless steel, pipes and tubes in the lower diameter, which would be coupled with de-hunting. So that would make us unique. DI pipe, I'm now mixing two of your questions regarding subsidiary. We have now taken steps to merge our DI fittings business with our DI main business. That would give us a synergy and would make us only among the few players in the market to do the DI business. Third thing, Saket, you talked about pellet being a blessing in disguise. There, Saket, I would just request you to focus. It's not blessing in disguise. It is the chairman's foresight. Because the way the Jindal SAW has been structured, there are inherent balancing factors where once the steel business versus the oil and gas versus the water, all of those. So that's a insight, foresight, intuition of our chairman to build a business model which is very robust. And that's a very important aspect of Jindal SAW, which has kept us in good stead, whether it is 2008 meltdown, 2013, now first wave, second wave. Every time you see, as Jindal SAW, our performance has been very consistent. And therefore, at the same time, we lose on those spikes that you keep on getting whenever there is a huge price movement. But we get a lot more compensated by a very robust performance where we don't have any problem. So the pellet business, I would just request you to focus on. It is not by chance, it is not a blessing in disguise. It's a deliberate policy of the organization to keep on diversifying, making robust business model guided by our honorable chairman. It is his intuition where we have kept all of these as Jindal SAW. Addressing your next issue of capacity utilization. See, capacity utilization, whenever you are looking at a very large diameter, especially large diameter pipes, there you could see there could always be a lot of gap between the boilerplate capacity as well as because you have got different sizes, you have got different thicknesses, and being a project-driven company, there are also intermittent periods where you need to do changeover, etc. So a capacity utilization is not the right kind of measure that we should apply to large diameter pipe manufacturing business. But what I can give you comfort that with all the announcements of water grids in different states, definitely our tonnages are going to go up significantly once you see the impact of pandemic taken up. Addressing the subsidiaries, as I mentioned to you, already 3 subsidiaries are getting merged with Jindal SAW, the stainless steel business, the DI fittings, and also there was a pipe mill in Indore. We are now merging that as well with the parent Jindal SAW company. So Jindal SAW will become more robust, strong in terms of a complete pipe manufacturing company. Significant subsidiaries then remain, which is Abu Dhabi, which is doing well. You mentioned about Italy. Italy, as you know, is gone. It's no longer a subsidiary. It's US. So US is coming back in performance. Abu Dhabi is doing well. All other subsidiaries of the pipe, etc., in Jindal SAW have been merged. You will get a much robust, bigger company with complete visibility. You talked about debt LIC. The LIC debt was essentially taken to improve our debt profile and capital structure. As you might know, it's a 10-year money, very cheap, and the repayments are back-ended. So it has given a lot of liquidity in the short term. And to say, as I have done in my presentation, please look at year on year, we are following our repayment profile to reduce debt constantly, both at local level as well as at the consolidated level. Also, as mentioned, there are few monetization initiatives which are in the pipeline. The moment that happens, you would see a significant improvement because those non-current assets, once they get monetized, the funds that would come would definitely go towards further reduction of debt. The last thing that you talked about was something in US 150 to 200 crores, probably because maybe you have picked up this from the market or wherever. Probably you are talking about a small problem that we had with one of our Canadian clients, which I must assure all my shareholders that has been absolutely addressed to the T. I'm happy to tell you we have already got a repeat order from the same client. So there is no issue between us and the client. There is no claim that is pending. The real part is we were supplying some large diameter coated pipes to one of our Canadian clients, DDP contract. So we noticed there were some issues while they were in the yard with our coating. We have identified the root cause and we have repaired all of those and completed the supply. So now, after that, we have even got a repeat order from them. So there is no such claim, there is no issue between us. It was definitely a problem that we discovered in some of the pipes coating. As I said, we found the root cause. It was because of the temperature differential during the time of application and has been adequately addressed in this contract, and also for all our future contracts we have taken adequate precautions to make those necessary disciplinary corrections at our unit. Things have settled. All that repair and maintenance cost that was incurred in terms of repair of the pipe have all been provided for in the financials, which today the shareholders are approving. So going forward, let me just re-emphasize, we have got a reorder from the same client, and every cost of this repair has already been booked. It was provided for, has been accounted for, booked. It will have no impact on future financials of the company. So that, I think I have covered all of those. On share price, Saket, as I have always been mentioning, share price has been a matter of concern for us as well, because that's how the shareholders or investors see us or value us. We, including our promoters, are largely focused on value creation, which is happening, and it is showing in the net worth, it is showing in our performance, it is showing in our rating. We definitely feel that there has been some lag on how the share market perceives us, and we are hopeful that now very soon that would also change. In fact, it's beginning to change. If you see in the last 2-3 months, there have been a very welcome move in the share prices, and that gives us confidence that now the shareholders are beginning to look at us closely. And it's, Saket, people like you who are very informed decision makers, who we feel would be able to influence the sentiment, bring out the truth among the investor community, and very soon we should close the gap of the net worth and the market cap and go beyond. So I think I have answered all the questions that you had. Chairman sir, maybe you may want to add something.
Yeah, I think that sums up.
Okay.
Let's take the next question.
Yeah, thank you, Saket. Next question, please.
Thank you. Our next speaker shareholder is Ajay Kumar Gupta. You may go ahead, please.
Good afternoon, sir, and thank you for giving me this opportunity. I want to know what is the plan to deploy a robust cash generation from operations. Thank you.
Ajay, as I mentioned, we do not have at this point of time, okay, let me clarify for all the investors and shareholders. We do not have any major project capex, etc., planned for now, unless there are some very, very dynamic, compulsive situations. So at present, there is no major project which is on hand. All cash flow which we will generate, which may come from the monetization initiatives or from operations, are largely going to go towards reduction of debt and improvement of the entire working of the company. Thank you.
Thank you. Our next speaker shareholder is Urvija Shah. You may go ahead, please.
Hi, sir. How are you? Thank you for the elaborate presentation, and I think a lot of my previous shareholders have asked in a lot of questions. So still, we have also been shareholders with you for quite some time now. So I do have certain questions. So sir, for the DI pipes, there is a lot of other players in the market are also very upbeat about the market currently. So if you can tell us that how is the current demand and pricing scenario that you see for the next 2-3 years, though you have touched upon in your presentation, but if you can quantify. And so a lot of the raw material prices have increased. So are our contracts, do they have a escalation clause, or with what lag can we pass on these prices? So if you can how quantify how it will impact our profitability of all the three segments, that would be great. Sir, you said that no major capex is planned, but every year roughly around 400-500 crore is in our CWIP, both in our balance sheet and in our cash flow statement. So can you quantify what does it go towards, and what is the IRR of this investment? And what is the maintenance capex that our business requires, and you said no major capex is planned, but then what is the capex for the current year that we are going to do, the maintenance capex? If you can tell on that. I think one of my previous shareholders touched upon the pellet prices, and how our chairman had the foresight. So, can you explain the cost dynamics of the beneficiation plant, and what are the current spreads, if you can quantify, for our Fe grade? Because I think our mine is different, so we sell a different iron grade pellets. So if you can explain a little bit dynamic on that, and help us understand how we will be benefiting from this price rise. As Jindal sir is also there, sir, we speak to you regularly on the con calls. I think our chairman sir, in his annual report, he has given a nice write-up elaborating and touching on various aspects that how he wishes to unlock shareholder value. So I think you talked and touched upon asset monetization and certain disinvestment. So if you can, you've obviously talked about the merger synergies, that what they will emerge, but what are the cost synergies? Ultimately everything boils down to the profitability. So if you can quantify that also, that how actually value in in quantity terms can emerge, so that would be great. And last part is obviously my previous participants have also touched upon. Sir, the debt issue. So how much is due for repayment in the current year, and if there are any steps we can take to for effective working capital management, that will also be great if you can help us understand that, because I think we are a working capital intensive, and with most of our payments coming from the government. So if you can elaborate on that how it will help us manage that would be great. So I think these are the questions right now. Then maybe I can follow up.
Thank you. Thank you. You people seem to really have come well prepared for all of those. So, a few things with Saket that you have addressed. So, let me now take on your CWIP maintenance capex. As you know, we are a multi-locational organization, and the CWIP in the last 1 or 2 years has been showing a little upward trend. Is primarily because we have been building these alloy, stainless, and the businesses that we have been building. So when we say that we don't have any major project on the anvil, what essentially we mean, because at some point of time there was a steel plant which was being contemplated. It is still on the drawing board because there is a understanding that we have with the Rajasthan government. Once we get the raw material stability stabilized, then maybe we will visit that. So such kind of large project the anvil. Having multiple locations, modernizing them, automating them would definitely require some. So CWIP that you are looking at and the maintenance is all going towards those where we are modernizing, diversifying, and adding some of the facilities in our stainless business as well as the other businesses that we are focusing on. Second question that you asked was about beneficiation process and spread on pellet. Let's just reiterate, the business model of Jindal SAW is such that we always have a blended EBITDA which is visible to all our shareholders. We believe the specific segments that we have within our business, those prices and EBITDAs are competitor sensitive information, and therefore we always deal with on a blended basis. But as all of you are seeing, pellet prices the way they are has definitely contributed in the last 2 quarters at the pole position to give the organization a very robust performance. But specifics of those segment-wise EBITDA or margin is something which we consider competitor sensitive, and we don't put it in the public domain. Beneficiation, yes, we are among the few, or maybe the only. Kudremukh was the only one who could successfully beneficiate iron ore starting from Fe grades in the mid-20s, and we have been able to take it up to 62, up to 67 also in some cases. So our beneficiation process is very successful. We have opened up a Lumpia mine now for us. Raw material stability is something that we are working on, and we definitely believe that pellet will continue to do the balancing act whenever these raw material prices for our pipe business goes up. Pellet is correlated to that, and vice versa. So now when the cycle turns, when the pellet business comes down to more reasonable levels, we believe that the pipe business would start contributing and will take the pole position. Your question about DI pipes, as you know, are very much a part and parcel of all the water grid projects essentially used for distribution of potable water within the municipality limits. In cities, largely DI pipe is the best mode of transport of potable water. And that, as I had already mentioned earlier, because of this Jal Jeevan mission, coupled with the state initiatives of water grid, has a very, very robust demand and would continue to have a robust demand in the next few years. In terms of the margins, some of our contracts do have price escalation clause. Some of our contracts do not have, but we are working with the clients. Even if there is no price escalation clause, such an extraordinary rise in, we have been able to secure some of the increases, and now we are in a position to pass on all raw material increase to our customers, where we are able to preserve and maintain our margin. But you are right, DI market is a very important segment. You must have read in the markets news, there are some new entrants who are trying to enter this segment. plus the existing players are also on and will to expand their capacity. So DI segment will remain a very good segment for all of us in the next few years, where we are very well entrenched and we are an established market leader there as well. Thank you.
Thank you. We take our next speaker, shareholder, Mausami Kumar. You may go ahead, please.
Yes, please. Good afternoon, sir. Good afternoon to respected Chairman, sir, and Board of Directors. Sir, I have one question only. Jindal SAW Limited has raised rupees 500 crores from LIC of India by issuing NCDs. Sir, I would like to know how this fund will be utilized. What is your fund plan for fund utilization?
Thanks, Mausami. The funds came into the Jindal SAW bank account prior to 31st March. It has been largely used to correct the debt profile in terms of repayment of some high cost debt and elongating the maturity profile, because the payments are back-end. So it has also helped us in bring down our cost of borrowing, because it's a fixed cost long-term fund, which is only available to the select few club members of AA rating companies and above. So that, since we are a AA rated company, we could get this cheap long-term funds, which has essentially been used to correct our debt profile. Thank you.
Thank you. Our next speaker, shareholder, is Dharmendra Prasad. You may go ahead, please.
Good afternoon, sir. Although previous shareholders has touched upon the debt part, but we want to understand almost all the peer companies are almost debt free. You had explained about that, how you are going to take care of reducing the debt, but how much time will it take to reduce those things and become a debt free company? Thank you.
Becoming a debt-free company is a desirable objective, but not necessarily the best objective. Because if you see, compare the cost of equity and cost of debt, return on equity and return on debt in terms of expectations, you have to have a healthy balance. But we definitely want to bring the debt to a level which is very firmly in control. The amount of non-current assets that we have on the balance sheet of Jindal SAW, the moment we are able to monetize all of those, you would see a huge reduction in the debt. And that, in terms of timeline, we are not able to really give it a very sharp fix because of the pandemic. Because of the pandemic, a lot of those initiatives are also getting delayed because due diligence is not happening, people are not able to visit. So things are all in the pipeline, but are getting delayed. But within next 12 to 18 months, I would consider that a lot of monetizing efforts which are there would give some good results, and you will see a reduction in debt, especially for those debts. But productive debt, for example, this LIC is something that is good for the company, because then for the shareholders, we are able to leverage and create more value. But I take your point. We will definitely bring down the debt once we have these monetization efforts result. Plus, on the normal profile, cash flows, company cash flows would always be there to reduce the debt, as you can see from our trend. Thank you.
Thank you. So that was the last question in queue.
Okay. So thank you, shareholders. I hope we have been able to answer all your questions. Otherwise, you can go on our website, give us your questions. We assure you we will answer them all in a reasonable time frame. So thank you all very much for this interactive session. I hope now the shareholders would get a more glimpse, a more insight into our company and the kind of effort that we are making to create value for all. Sunil, would you please take over from here?
Thank you, sir. The scrutinizer will prepare the consolidated report on e-voting and voting at this AGM and hand over his report to Honorable Chairman or the Company Secretary or any other person authorized by him in this regard. The result of this AGM will be declared in due course of time and will be uploaded to the website of the company as well as to the stock exchanges. Now I request, since this business of the meeting is over, the meeting is concluded with the permission of the Honorable Chairman. Now I request Mr. Neeraj Kumar to propose a vote of thanks to the directors and the shareholders who have participated in this meeting. Shri Neeraj Kumar.
Thank you, Chairman, for your continuous guidance, encouragement, and support. You have really helped us to be what we are. Thank you, all the directors, for your active participation, contribution towards making our organization what we are. Last but not the least, stakeholders, shareholders, the kind of effort, the kind of interest that you have shown in us gives us the encouragement that we continue to build the value for the organization where all stakeholders benefit. So thank you very much. We will be back next year with a very robust result. The early indications are good. So thank you for being support. Continue to participate, continue to show interest. We are always there for all of you. So with that, let me just request Chairman to give us some word of encouragement and maybe share his thoughts.
I thank you all the directors, and we have been getting great support from all my directors, and thank you to shareholders. And I think this is a right way to start interacting with all the shareholders and directors from the comfort of their own home. So I thank you, and we pray that this pandemic, everybody is safe during this pandemic time. Thank you.